Hello friends, in this video we will study the provision regarding tax deduction at source given in section 51 of the GST Act. First we will see who are liable to deduct tax. The subsection 1 of section 51 requires Department of Government, local authority, governmental agencies and such other persons as notified by government on recommendation of council to deduct tax at source of a supplier of taxable goods or services. The person who are liable to deduct is known as deductor, while whose tax is deducted, that is supplier, is known as deductee. The deductor who are liable to deduct tax at source has to obtain registration in form GST REG 7. Having seen who are liable to deduct tax, now we will see that when such tax has to be deducted. The subsection 1 of section 51 states that the liability to deduct tax at source arises at the time of making payment or crediting the account of supplier of taxable goods or services, provided no tax has to be deducted at source, where the value of supply of such goods or services under a contract does not exceed rupees 2,50,000. Thus, it is evident that tax has to be deducted at source on supply of taxable goods as well as taxable services. For example, a supplier has received a PO of rupees 3 lakhs. Then in such case, as value of supply exceeds rupees 2,50,000, so tax has to be deducted at source at the time of making payment or crediting the account of such supplier. As per the explanation attached to subsection 1, it is provided that tax has to be deducted on the value of supply excluding the tax amount. That is, no deduction has to be made on amount of SGST, CGST, IGST, UTGST and cess levied on the tax invoice. The proviso to subsection 1 provides for the situation where no deduction has to be made. The proviso states that where the location of a supplier and a place of supply is in a state and the location of a recipient is in different state, then in such case no deduction of tax has to be made under section 51. The subsection 2 of section 51 provides that the deductor has to deposit the tax within 10 days after the end of the month in which the tax has been deducted. Say, for example, the supplier has deducted the tax in the month of July 2017. Then in such case, such person has to deposit the tax by 10th of August 2017. If such person fails to deposit the tax by 10th of August 2017, then he has to pay the same along with the interest. Now, the person who has deducted the tax is liable to furnish the certificate to the deductee as per the subsection 4 of section 51. The subsection 4 states that such person has to furnish the certificate to deductee within 5 days of crediting the amount to the account of government. For example, say the person has deposited the tax on 10th of September 2017. Then in such case, he has to furnish the certificate by 15th of September 2017. If he fails to furnish the certificate to the deductee by 15th of September 2017, then in such case he is liable to pay the late fee of rupees 100 per day, subject to the maximum late fee of rupees 5,000. So in our example, if person fails to furnish the certificate by 15th of September 2017, then in such case he will be liable to pay penalty of rupees 100 per day from 16th of September 2017. Further, the subsection 3 of section 51 gives the contents of the certificate. It states that certificate should contain contract value, rate of deduction, amount deducted, amount paid to the government, and such other particulars as may be prescribed. The subsection 5 allows the deductee to claim the amount deducted in his electronic cash ledger, provided the person who has deducted the tax has shown the same while filing his return in Form GSTR 7. Thank you.